Hi there, I'm Drew Russell. I'm a broker associate with Michael Saunders and Company in Sarasota, Florida, selling all types of real estate with a mindset of luxury service. I'm going to give you a quick market update for 2022. So if we're going to look at what happened in the broad Sarasota real estate market in 2022 so far, it would be hard to say that there's been a more interesting time in real estate in, say, the past 15 years. Try to think back, if you can, to January of this year, which seems like ages ago. We've just passed the halfway mark in the year. Back in January, if you remember, a gallon of gas averaged $3.04 per gallon in our area. As of about 2 weeks ago, we were up to $4.89, and that's put all kinds of pressure on consumers. Another thing that's super different about the world is that in January, there was no Ukrainian war. So that started on February 24th of this year. So we had both of those factors changing. And then we had another big change as we saw inflation continue to heat up. The market really reached a fever pitch in February and March. And with that, as interest rates increased, we saw the average mortgage rate jump from 3.2% at the beginning of January up to now about 5.78%. So you could make an argument that the rate has almost doubled for borrowers looking for financing. And as you can see from this diagram, there's a projection that most analysts think rates will continue to go up through 2023 until the Fed gets a handle on inflation. So it would be an understatement to say that things now are very different in our world. And let's talk about how that is playing out in our Sarasota market. So how do all these world changes apply to what's going on in the local Sarasota market? I can tell you from experience, if you were a seller probably in January or February of 2022, it's very possible that you hit the statistical crest of buyer frenzy. That means that maybe you didn't get the highest price that we'll see in the next 12 months, but you had multiple offers, you had buyers waiving inspections, you had all kinds of craziness for buyers competing for properties because of insatiable demand, and it made the selling process much more hassle-free and pleasant for sellers. I would say in March or April, probably the beginning of April, I noticed a big change. You just started feeling it. There weren't as many showings when you took a new listing. We had listings that started to stay on the market 7 and even 14 days. Everybody was looking at each other going, what is going on? What's wrong? And all these global factors, I think, kind of came together in conjunction with the stock market giving up gains. And everybody just kind of took a collective deep breath and said, wow, we're not going to be as aggressive as we've been. So with that, we have seen kind of a change in what's going on. If you look at this slide, you can see that nationally, Showing Time, which is one of the largest aggregators of real estate showings nationally, shows that the US overall is down about 18.2% from normal showing volume. And then when we look at the South, we're at kind of a 22% average. So the amount of lookers that we saw through the end of the spring and beginning of the summer is down quite a bit. And if we dig into Sarasota statistics even more, and we look at what I'm going to call the lower end of the market, which is funny because I'm saying that's up to $1 million, but just for broad categories, if you look at what happened in the low end market, if you look in January of 22, we had 466 active buying opportunities for sellers, and we had 1,100 units go pending. So that is very, very low inventory, about a third of a month of inventory, which is almost nothing. And let's contrast that with the numbers ending in June. We had 1,414 properties available. That is an increase in inventory of 203%. We also saw during that same time period pending sales go down about 21%. So major shifts in the under $1 million market. If we look at the luxury market, you'll notice kind of a similar pattern, but maybe not quite as stark. There's 106% more inventory in June than there was in January, and we see about a 34% decline in pending sales over the same time period. So Basically what's going on is the market was so overheated, and what we're seeing now is a bit of a return to normalization, and that is affecting all segments of our market. So what does all of this mean? You might be asking me what my take is. I'm going to give you a couple ideas of what I think we can expect in the second half of 2022. If you look at this slide, you'll see that the Realtor Association has upped their forecast for projected inventory. Originally, they projected only a marginal 0.3% increase for 2022, which has been abruptly changed to a 15% increase in inventory. Keep in mind that even if we increased our inventory by 15 or even 25%, our market would still be low and short in supply. So what I see happening is a moderate inventory gain. So what does this inventory gain mean for pricing going forward? Well, as you can see from this diagram, economists are still projecting from the second quarter of this year that we would continue to see prices climb about 9% nationally. And then we go into a more typical pattern from 2023 through 2026, averaging kind of the normal 3 to 4% per year return that you might expect on real estate in a balanced market. Keep in mind that a balanced market is defined as a market where there's 6 months or less of supply based on closed sales. And so we are still in the about 1.5 month range of inventory right now in Sarasota. So if you're a seller, it's still a great time to sell. You probably won't see bidders bidding hundreds of thousands of dollars over, offering you crazy concessions and waiving inspections, but you will see continued strong buyer demand and interest. Going further, people ask, well, what's going to go on with rates and what's going to happen with a potential bubble scenario if prices do slow or stall? If you look at the slide on the lending standards, you can see that the lending industry is still very, very strict on who can qualify for a loan. So if you look at all the purchases that happened throughout this run-up post-COVID, you'll see that every single person who borrowed money had to be rigorously qualified to borrow and was very well vetted financially. And if you look at the crash that happened in 2006, you can see it was the complete opposite. So most purchases in our market are made with cash or very well-funded borrowers. So even if things begin to slide, you're not going to see a cataclysmic adjustment in pricing. And in fact, I expect quite the opposite. So the bottom line, I think, is that we are going to see a continuing moderated market. I think rates are still going to be a challenge. I think cash buyers are going to be a little bit more discriminating with the equities market being kind of topsy-turvy. But 2022, I think, is going to be a great, strong year for our market, and I will look forward to updating you again in the near future. So again, I'm Drew Russell. I hope you enjoyed my thoughts on the market. If you'd like to talk real estate, feel free to reach out, and thanks again for watching.